Good morning. This is Bloomberg Daybreak Europe. I'm Giovanna Versace, and these are the stories that set your agenda. HSBC misses estimates for pre-tax profits as rising expenses hit the bottom line. But it's a beat on net income for UBS. We'll be speaking to the CEO, Sergio Ermotti. Asian stocks edge higher as China's trade negotiator says there's agreement on extending the U.S. tariff truce. Treasury Secretary Scott Bessent says President Trump will make the final decision. And watching for dissent. Investors expect a pause from the Fed today, but will Jerome Powell face more pressure from FOMC members to cut U.S. interest rates? Welcome to Daybreak Europe, everybody. So picking up on earnings momentum, so many earnings coming through. Right now, we're just getting some earnings from Mercedes. So let me just bring you some of the highlights over there. Second quarter sales coming in at 33.15 billion. That is estimates of 33.23. So just a smidge below the estimates on the sales. For your cars, return on sales at 4 to 6% versus a guidance of 5.13%. So this is one of the key performance indicators in the space. And what they're doing is essentially guiding to the range that was in line with the estimates of 5%. So 4 to 6% is the range that they're guiding to. Second quarter adjusted EBIT coming in at 1.99 billion versus estimates of 1.59 billion. So a bit of a beat there as well. As for some of the other commentary that's coming through, we are getting, well, this is it. This is all we have for now. We have the targets of return on sales at 4 to 6% versus estimates of 5.13%. And then we have that EBIT number also beating versus the estimates, 1.23 billion versus 971.4. Year to date, the stock is marginally down about 1.1%. So that is Mercedes. We'll keep track, obviously, on how the stock opens up. A lot of focus on the auto space after news of that EU-US trade deal and the fact that the tariff rate on autos will now be reduced from 25% to 15%. So earlier in the week, though, lots of volatility in the auto space. As for other markets, this is the picture today. So much to get through, not just earnings. We have the Fed meeting coming up later. Expectations are that they may provide the groundwork for a September rate cut. S&P futures, NASDAQ futures, both pointing towards the green. FTSE 100 coming off all-time highs, so up 0.2% this morning. Then European markets also building on some of those positive gains, even though the handover overnight, let's switch over, not so positive from Asia Pacific, as some of the questions around the trade truce between U.S. and China and the timing of that was pushed back. Ultimately, the decision still will lie with President Trump on what happens with that. 10-year yields, though, yesterday we did see a big rally, some momentum, money going into fixed income, a very strong 7-year auction, which means that the 10-year yield went down about 8 basis points throughout the course of trade yesterday. The USD trading sideways, and then Brent, another massive jump yesterday in pricing. So that's two day-to-day, back-to-back gains of more than 2-3% in the energy complex on geopolitical risk premium and the fact that President Trump seems to be putting pressure on President Putin to return to the negotiating table and agree to a ceasefire truce with Ukraine. So that's it for cross assets. Right. Now, let's switch over and go back to earnings, all of the earnings we've got so far this morning. Let me just give you the UBS results also, because those came out about 15 minutes ago. Switzerland's biggest bank posted higher than expected profits in the second quarter with net income of $2.4 billion. UBS signaled that the prospect of cooling global trade tensions should support results as investor activity revised. Joining me now is Bloomberg Zurich Bureau Chief Jan-Henrik Forster. Just taking a look at the UBS earnings on first glance, it seemed to be pretty positive, both on top line, bottom line, also on guidance as well.
Yes, good morning. So UBS second quarter, I feel personally a little bit like still water, no spark. Analysts will probably call this later a low quality beat. And that's because when you look at the operating divisions, the beats are not very impressive. I guess on wealth management, it's in line on the pre-tax basis and also revenues. Investment banking is a slight beat, mainly driven by trading. Like this goes back to the beginning of the quarter with all the post-Liberation Day frenzy you saw. So I think this is in line with what you will probably see from other investment banks. Now the beat, 100% or doubling net profit, that's mainly driven by a tax benefit and also a release of legal provisions. So that's what I mean when I say low quality beat. I don't want to create any sense of panic. Overall, this is all in line with what was expected. Mainly the capital returns to UBS is on track. And also the cost savings. I mean, we go back 2 years, Credit Suisse, biggest financial services deal in history, and the integration is on track. I think this will be reassuring for investors. Nevertheless, I think people were hoping for a bit more performance on the wealth management side.
Okay, let me ask you a question about one of the overarching themes that has been hanging over the UBS stock for most of this year, and that is the uncertainty surrounding the Swiss regulatory landscape and what that may entail in terms of capital requirements. Did we get anything out of the earnings today that provides clarity on that? Because there actually has been a bit of a rebound in the UBS stock price.
There has been a rebound, and to answer your question, no, there's nothing in the press release this morning on the capital requirements. Look, the capital requirements, or put differently, the full backing of foreign subsidiaries will go through Parliament. So I guess the final outcome we won't know for the next 2 years. But in a nutshell, what this means, and this is why it's an overhang on the stock, is these capital requirements basically tell UBS, you can't grow, or if you want to grow, you do so at higher costs. So it's going to be interesting, or maybe even tectonic, if we look into the future. How is UBS going to resolve this kind of conundrum of higher capital requirements compared to peers? We reported some months back about UBS mulling a potential relocation of the headquarters. These discussions are still active. And everybody is talking about it. So at some point, investors want clarity. I guess the good news when we got the final capital requirements from the government was that there's a long phase-in period. So this is 20 billion more over the next 10 years. That's digestible. But UBS may say, look, it's still in a disadvantage, and we need to work on our structure and think about, even nuclear options.
Yeah. Okay. Bloomberg's Zurich bureau chief Jan-Henrik Forster, thank you so much. And on a programming note, Francine Lacroix speaking to the UBS CEO Sergio Ermotti. You can catch that interview at 7 a.m. London time, so in about 50 minutes time. Now, I just want to go back to HSBC shares because they have come back from the lunch break in the Hong Kong trading. They have come back from the lunch break, and you can see that the stock is extending declines, down 2.8%. So before going to lunch break, they were down 0.5%. The earnings came out. This is the first glance that we're getting post-earnings. As we spoke about, a miss on the profits, higher expenses, and also some credit losses coming on back of exposure to Hong Kong real estate and write-off over there. So 2.6% lower for HSBC in Hong Kong trading. Now, the U.S. and China are to continue discussing the terms of a tariff truce extension. U.S. Treasury Secretary Scott Bessent says President Trump will make the final call on extending the tariff truce with Beijing.
The Chinese deputy minister did say that we had agreed on a pause. We have not. Nothing is agreed until we speak with President Trump.
I just had a phone call from Scott Bessent and had a very good meeting with China. And it seems that, they're going to brief me tomorrow. We'll either approve it or not. But he felt very good about the meeting. Better than he felt yesterday. Yesterday I said, "Ooh, here we go again. Here we go again." But today it worked out very well.
Somewhat somewhat upbeat President Trump there from where let's bring in our China correspondent, Min Lo. Ultimately, it's going to be his decision. We have to wait for the president to decide on what happens with these tariff discussions and whether the deadline is going to be extended. Is it the expectation that we will get another deadline extension on these talks?
Yeah, you heard what President Trump said earlier. Scott Bessent felt good about the meeting. So it seems like the signals here are quite positive. We are waiting for Scott Bessent to go back and brief his boss, and perhaps we will get that well-telegraphed extension of the trade truce by perhaps another 90 days. President Trump did confirm that he is going to meet with President Xi sometime before the end of this year. No time frame is given, but at least that tells you that the summit is going to happen, and maybe the two sides might leave some of the bigger announcements to a time when the two presidents meet. And of course, we know that there has been so many issues on the table. Rare earths is one of them. Jamie Sangria saying that this is the biggest concession that China has given to the U.S., the commitment to keep rare earth flowing to the U.S. That's one. And then there is, of course, the secondary sanctions on Chinese purchases of Russian oil. Scott Bessent warned his Chinese counterpart that perhaps secondary sanctions could be coming. And this is where there is perhaps some level of disagreement, because remember that Russia is the biggest source of crude oil for China, and so cutting off that oil import is going to be quite disruptive for the Chinese economy. And China has said, according to Scott Bessent, that they are concerned and they will protect China's energy sovereignty. So whether or not there will be some agreements around that, still an open question now. Of course, China will want to seek a lowering of tariffs, especially the 20% fentanyl-related tariffs. Currently, no indication as to what the agreement will look like, but certainly they're kicking the can down the road, potentially when President Trump, if and when he decides to extend the trade truce.
Bloomberg's China correspondent Min Lo, thank you so much. Now, back to earnings. We're going to talk luxury now. Sales at Gucci have plunged 25% on a comparable basis as shoppers turn away from Kering's largest brands. Luxury goods are in focus today as well, alongside many other sectors, as Hermès and Prada prepare to reveal sales numbers. We're joined by Bloomberg's Angelina Rasque. Angelina, let's just start with Kering, what we got yesterday. Overall group revenue down 15%, but Gucci revenue down 25%. What is holding back Gucci sales?
Hi there. Indeed, I mean, it was widely expected. It was the second quarter where sales dropped 25%. The analysts, some analysts who were listening to the call yesterday, they described the call as a wait-and-see call. Why wait-and-see? Because there's a transition in design at Gucci. They appointed a new designer earlier this year. He took over this month. His name is Demna. He was designing previously at Balenciaga, which is another group label. And we found out yesterday from the co-deputy CEO, Francesca Bellettini, that in September there'll be a presentation by Gucci with hints of his creative vision, but his full fashion week fashion show will be in Milan in March next year. So that's on the design front. On the management front, Kering investors are waiting for Luca De Meo basically to arrive from mid-September. That was announced in June. That was a big shock. He comes from the auto industry, and we found out yesterday in the call that from the other co-deputy CEO that Luca De Meo will probably speak at some point to investors to present his vision in 2026. So yeah, I guess investors have to be patient.
Plan. Yeah. There was an article up on the terminal overnight, and they drew distinction of the divergence of fortunes between the Novo Nordisk Eli Lilly stock to Hermès and LVMH, which is really interesting because there has been quite a stark divergence. Hermès obviously in focus later today with their own earnings, but they have been a bright spot amidst an industry that seems to be facing a lot of headwinds. What are we expecting today?
Exactly. I mean, typically Hermès tends to be the most resilient brand because it caters really to the wealthiest customers. We're expecting overall sales in the second quarter to be up by 8.9%, and the crucial leather goods and saddlery unit expected to be up double digits. So, you know, they produce coveted products that are in short supply. You know, that's typically the Birkin, which, by the way, earlier this month, it sold at an auction for almost for about $10 million. So that shows you that a lot of people consider these to be almost like investment-like products. But basically, yeah, we're expecting good news from Hermès. However, the only caveat I would add is that Hermès has a much bigger exposure to China, and we know that China demand there has been very weak. The region that includes China for Hermès represents almost half of total revenue, and if you compare to LVMH, that's about 28%. So yes, they do make really coveted products, but bigger exposure to a region that's been very weak. So we'll have to see, and also what they have to say about tariffs, because so far the luxury executives have been have said that the 15% tariffs are manageable.
Yeah, tariffs, of course, dominating all of the conversations around these earnings. Bloomberg's Angelina Rasque, thank you so much. Well, aside from company earnings, let's also just take a look at some of the other data that's coming out today. Don't forget, 1:30 p.m. UK time, we will get the second quarter GDP reading in the U.S., and that's going to be closely monitored because the last quarter's reading was negative. So we will see whether this one shows an actual uptick and an improvement in the second quarter. Of course, all of the tariff noise having an impact on the U.S. economy and on business sentiment. The big one, 7 p.m., the Fed rate decision, the press conference, that is UK time, so all eyes on that and whether they do actually they laid the groundwork for that September rate cut. And then after the market closes, we will be getting results from Microsoft and Meta, and there any indication on capex spending, on AI spending will be watched for closely, in addition to the growth in the cloud business. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, so Day-B Go. And coming up, the Fed is expected to hold rates today, despite pressure from President Trump and his allies to lower borrowing costs. We'll preview that decision next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Fed is widely expected to leave its benchmark rate unchanged at the conclusion of its two-day meeting later today. But it comes as Jerome Powell faces intense pressure from President Trump and his allies to cut borrowing costs. The Fed chair may face multiple dissents from officials who want to provide support to a slowing labor market. Let's bring in Bloomberg's Valerie Teitel. Val, so today no one is expecting the Fed to go for an interest rate cut. It would come as a major surprise if they do, obviously, perhaps laying the groundwork for a September cut. But then some members of the committee will be pushing for them to take a more dovish approach.
Yeah, a lot going on in this Fed decision, but it's a lot of nuance. As you mentioned, Jumana, the Fed is widely expected to hold their key rate, but it's about whether they want to inch that door open to the September rate cut that the market is currently pricing at around 2/3 odds to happen. Now, they could do this in a various amount of ways. It could be Powell's tone in the press conference, but it could also be the change of a few key words in the statement, mostly in the first two lines, Jumana. Do they continue to characterize economic activity as solid? Do they continue to characterize the labor market as solid as well? If they drop either of that language around the labor market or economic activity, it could perhaps foreshadow that the Fed is coming closer and closer to the clarity it does need to resume its cutting cycle in the second half of the year. That's one to watch out in the statement. The also one to watch out, Jumana, is any possible dissents. That will come at the very bottom of the statement when it outlines the voting of the Fed members. Governor Waller seemed to have set up his dissent just before the blackout period. If he's joined by Governor Bowman, that could be the first time that two Fed governors dissent in a decision since 1993. It's more often and more likely we get dissents from the regional Fed presidents, but it's very rare to see them from the Federal Reserve governor's board seat as well.
Yeah. We also get U.S. data before the Fed meeting, U.S. GDP. What's on slate there?
It's all about whether trade has now become a significant boost to GDP after being a significant drag in the first quarter. That import surge from tariffs, the customers and businesses front-running tariffs in the first quarter did pose a significant drag to GDP, was one of the main reasons why we had a contraction in first quarter GDP. But that could turn around now and actually cause a significant boost to the bottom line. Also, one to watch is consumer spending. It makes up 2/3 of U.S. GDP. If that consumer continues to hold in strong, if that first quarter boost to consumer spending on consumers front-running tariffs continues into the second quarter, it could pose some big questions on how resilient the U.S. economy is. But the headline number expected is for a gain of 2.6% in the second quarter after a fall of 0.5% in the first quarter.
Bloomberg's Valerie Teitel, thank you so much. Well, coming up, Prime Minister Keir Starmer says the UK will formally recognize a Palestinian state in September if Israel does not stop its war in Gaza. That story next. This is Bloomberg. Starmer says Britain will recognize Palestine in September unless Israel agrees to a ceasefire with Hamas. The UK Prime Minister says Israel must also commit to a peace process that would result in a Palestinian state. Israel condemned the announcement, calling it a reward for terrorism. Joining me now is Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. Just tell us more about Keir Starmer's position, because it isn't as explicit as the one put forward by President Macron last week.
No, it's not. And I think it is very significant from the UK to basically come out and say that it will unilaterally declare recognition of Palestinian statehood in September if the war in Gaza is not over by then. But it's not quite as forthright as President Emmanuel Macron. It's complicated in the sense that, in one way, I think what Keir Starmer has been trying to balance is the need to do something to show the electorate in the UK and to show his own Labour Party that he's doing something to put pressure on Israel. Because I think because of the devastation in Gaza, because of the humanitarian crisis there, the starvation and everything, we've come to a bit of a turning point in the last week. Mm-hmm. So Starmer's clearly believes he has to do something, but at the same time, he sort of feels that unilateral recognition is not going to change anything for the Palestinians and probably won't move Israel.
Well, Keir Starmer under political pressure domestically. What about Netanyahu? He's also under both international pressure, but then also domestic pressure as well within his own coalition. Very
much so over the war. I think it's clear that there's growing sort of weariness about the war in Gaza. That on the whole, Israelis want it over. Of course, they want all the hostages to be released as well, and that's the kind of fundamental contradiction: ending the war and getting all the hostages out as well, getting Hamas to agree to that. As far as Palestinian statehood is concerned, I think it's important to note that Israeli society as a whole, not just the far right in the coalition, they're against Palestinian statehood, and that is something that's become very clear since October the 7th. Mm-hmm. There's very little support in Israel for Palestinian statehood right now.
Yeah. Well, let's see what happens at that UN General Assembly and obviously the ceasefire discussions between now and then. Bloomberg's Paul Wallace. Meanwhile, oil prices spiked to their highest in more than a month after the U.S. president said he was giving Russia 10 more days to agree to a ceasefire in Ukraine. Earlier this month, Donald Trump set a 50-day deadline, threatening secondary sanctions if Vladimir Putin does not comply. And coming up, we're going to have more on bank earnings that were out this morning. HSBC and Santander both posting second quarter results. All the details next. And on the respective performance, you can see HSBC shares are down 3% in Hong Kong trading after coming back from that lunchtime pause on the Hong Kong Stock Exchange. So an adverse reaction there. We will digest why and talk about some of the details of what came out from those earnings in a short while. When we come back, this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I'm Jemana Bersecci, and these are the stories that set your agenda. HSBC misses estimates for pre-tax profits as rising expenses hit the bottom line. But it's a beat on net income for UBS. We'll be speaking to the CEO, Sergio Ermotti. Asian stocks edge higher as China's trade negotiator says there's agreement on extending the U.S. tariff truce. Treasury Secretary Scott Bessent says President Trump will make the final decision. And watching for dissent. Investors expect a pause from the Fed today. But will Jerome Powell face more pressure from FOMC members to cut U.S. interest rates? Okay, so let's continue with some of the breaking news that we're getting. This time I'm going to bring you some GDP data coming through from France. So French preliminary second quarter GDP beats estimates, rising 0.3% quarter on quarter. That is versus estimates of 0.1%. In terms of consumer spending, also, there's been a bit of a rise for the month of June. That has risen 0.6% month on month versus minus 0.3% estimates. And what we are getting as well is these are stronger GDP numbers in anticipation of other Eurozone GDP prints that are coming later today as well. So marginal reaction in the euro. Let's also talk about earnings that have hit too. Adidas just dropping now as well. And here we got second quarter operating profits beating versus expectations, 546 million versus estimates of 503.1 million. The second quarter gross margin is coming in line, 51.7 versus estimates of 51.5. Second quarter revenue, so top line, a miss versus estimates. So 5.95 billion versus estimates of 6.2 billion. So a bit of a miss there. In terms of the guidance, Adidas still sees a full year operating profit of a range of 1.7 billion to 1.8 billion. So that is actually lower than the estimate. The markets may be reacting to the fact that they've revised lower, or at least they are guiding lower than what the market thought they would be guiding to. And then second quarter from continuing operations, 375 million, again, a bit higher than that estimate. Okay, so let's move on and take a quick look at how broader equity markets are faring over here. Leaning towards the green, European markets up 0.3%. S&P, NASDAQ also trading the green as we head into the Fed meeting and, of course, those Microsoft Meta earnings after the close today. Switching over, what we did get was a sort of mixed handover from Asia Pacific, though things are moving towards the green now. You can see the Asia Pacific index is up 0.5%. 10-year yields rallied 8-9 basis points yesterday in trade, a strong 7-year auction. The USD is trading slightly weaker, and then Brent up close to $73 again. A big gain yesterday in trading on further threats or further announcements from President Trump that he would like to see Russia come to the ceasefire discussions with Ukraine. So $73, shy of that is where we are in Brent. Okay, let's go back and revisit what we've got out of some of these key European banks this morning. Santander has posted a record second quarter profit and announced a new buyback. Spain's largest bank making good on a pledge to repurchase at least 10 billion euros worth of stock over 2 years. Meanwhile, HSBC earnings for the second quarter fell short of expectations after it posted a rise in expenses. Joining me now is Bloomberg Intelligence senior bank analyst Thomas Notzel. Thomas, maybe let's just start with Santander. What were some of the key takeaways for you, apart from, I would say, the big one, which is, of course, the continuation of that share buyback?
Yes, I think all in all, 2025 targets on track, no guidance upgrades. No surprise, everything in line. So business as usual, very good for Santander. There's an Investors' Day in February next year, and I think up to this day we're not gonna see massive changes in guidance or any upgrades to share buybacks or dividends.
Yeah, let's turn to HSBC. Well, the second quarter profits have fallen short of expectations. That being said, it feels as though the credit losses that they're taking a hit on and some of the Hong Kong real estate exposure could potentially be mitigated in investors' eyes by the strong performance in the wealth management business and their NII targets for the year.
Yeah, well, if you look at the second quarter and first half results of HSBC, it seems like they have missed on pre-tax profit. But if you exclude notable items, it seems like they actually did deliver quite good results, strong results, reiterated ROTE target. Revenues are kind of in line despite HIBOR plunge in the first half of the year. But I think 42 billion in net interest income can be fragile to what has happened, what will happen in the second half of the year. So all in all, good results. Cost seems to be on cost restructuring seems to be on target, which is good as well. Good to see from HSBC. And as you mentioned, wealth management is doing very well. 22% increase, strong client acquisition in the first half of the year. So definitely the engine of growth for HSBC is working very well. And of course, commercial real estate loans in Hong Kong, slightly higher provisioning in the second quarter, a little bit more than market expected. But the focus will be, okay, what is the next for HSBC? Is 40 basis points cost of risk deliverable for 2025, or there is a higher risk of more provisions coming later on?
And also getting into almost 1 year since Georges Elhedry, the CEO, stepped into the CEO seats. So it's been 1 year of that restructuring plan. And Bloomberg Intelligence senior bank analyst Tomas Noetzel, thank you so much. Well, the Banco Santander CFO will be on the opening trade later this morning at 7:30 a.m. London time to talk through those results. So you don't want to miss that interview. But let's revisit another company that also reported earnings this morning in the auto space. Mercedes-Benz has reinstated guidance at a lower level, blaming pressure from U.S. tariffs and intensifying competition in China. Bloomberg's transport reporter Danny Lee joins us now from Hong Kong. As ever, with so many of these earnings, it's not just about the earnings, but also about the guidance that they give. Interesting that Mercedes have marked down their guidance for the rest of the year. So talk us through what they said today.
Yeah, after pulling their guidance in the first quarter, they brought it back, now having more certainty than ever around the Trump tariffs, this 15% rate that now will be charged, and therefore they could reinstate the guidance. But it is at a lower level, between 4% and 6% on the adjusted return on sales. And that kind of follows a similar theme from what we saw with Volkswagen earlier this week. We saw also Stellantis and Audi. They're all putting guidance in at a lower level because of the effect of the Trump tariffs primarily. So it's important, at least for the auto sector, particularly in the European majors, that they now have more certainty than they did last week because there is a deal in place. But clearly, it just reflects the impact that this does have going forward, and particularly in key markets such as the United States, that the German car industry, the European auto industry, with the competition there is and falling sales, they're all just going to have to weather.
Yeah. Let's talk more broadly about the industry. Earlier this week, one of the lines that hit me from the Stellantis earnings was that very big hit that they were seeing on back of these tariffs, 1.2 billion euros. And it really speaks to how many headwinds these automakers have faced. Clearly, now they're getting a bit of reprieve after the EU-US trade deal. How do we expect that to show up more broadly, more thematically for the industry as a whole?
Well, we are likely to see a continued struggle when it comes to sales, which are weaker for a lot of these European automakers. Mercedes has themselves warned that group revenue will be significantly lower at the end of the year because of the tariffs, the competition that they face, and particularly around cars and vans, two of its major segments, which they are going to see a bigger drop in revenue. And with sales falling, particularly in the second quarter, that is likely to be a similar theme in terms of how someone like Mercedes is going to struggle for the rest of the year going forward. And when it's not just about the cars or the vans, but even EV sales, which dropped much more for Mercedes. So clearly the broad theme for the European auto industry is one of transition and change, and plenty of them are going through restructuring and overhauls at the moment. So, and with also leadership changes. So there is a lot for the European auto industry to try and weather on top of the tariffs.
Yeah, pretty remarkable price action in Stellantis specifically. The stock is down almost 70% since those 2024 highs. So, as you say, it really speaks to some of the challenges that is facing specifically the automaker industry in the European continent. Bloomberg's transport reporter Danny Lee, thank you so much. Now, to some of the other stories making news this morning. Boeing nearly halted its cash burn in the second quarter, indicating that a turnaround started by its CEO, Kelly Ortberg, is paying off. Operating cash flow turned positive for the first time since 2023, while revenue beat estimates, jumping 35% to almost $23 billion. Boeing shares fell more than 4%, but erased the losses in extended trading. And Starbucks shares rose in late trading despite third quarter sales and profit missing expectations. Investors focused instead on green shoots in the earnings release, including the first sales gain in China since the end of 2023. Visa reported third quarter earnings that beat estimates, with revenue rising 14% to a record $10.2 billion. But shares fell 2.3% in extended trading after the world's biggest payment network left its full-year earnings outlook unchanged. And it was a sales miss for L'Oréal, the world's biggest maker of beauty products. The company reported weaker demand in North Asia and a slowdown in Europe. European sales rose 2.4%, well below the 4.2% analysts had forecast. The beauty industry as a whole is facing consumer uncertainty due to, you got it, U.S. tariffs, while demand for skincare and makeup in Europe is slowing, particularly in France. And coming up, Novo Nordisk shares suffered their biggest intraday fall on record as sales of its blockbuster weight loss drug Disppoint. Details next. This is Bloomberg. Novo Nordisk has named Mazir Mike Doodstar as its new chief executive officer after issuing a profit warning due to disappointing sales of its blockbuster weight loss drug. Shares of Novo plunged as much as 30% in Copenhagen, the biggest drop on record, wiping $93 billion off its market value. Let's bring in Naomi Kresha, Bloomberg senior reporter on pharma. So an appointment of a new CEO, a profit warning, investors seemingly quite disappointed with the stock down 30%.
That's really true. I mean, I think for investors, this is about a realization that after pioneering the weight loss market, Novo is no longer the leader in the weight loss market. And I think that this is really what is weighing on the company, weighing on the shares. And there are a number of reasons for this, but really yesterday's profit warning showed that the situation is worse than many investors had thought, and that the kind of the turnaround that had been hoped for the rest of the year was really not going to materialize.
What is the turnaround plan for the incoming CEO? How does he plan to move forward and away from some of the problems that have set back the firm?
So he was light on details yesterday, as maybe could be expected, but he has promised to move quickly to raise the pace at the company to try to push forward from their experimental pipeline of new medicines to push things forward more quickly. He also said a lot that indicated that some cost cutting may be to expected, maybe expected. He didn't, he wouldn't be nailed down on job cuts or anything like that. But definitely the positioning in his comments pointed to looking for efficiencies as well.
Yeah, well, the stock is down 60% in the last year. Quite a turnaround that he will have to navigate. Bloomberg senior reporter Naomi Kresge, thank you. Well, earnings seasons faces a crucial test later today in the U.S., with tech giants Microsoft and Meta also set to report results after the bell. Let's get more with Bloomberg's Valerie Teitel. Just quite simply, Val, what are markets watching out for today for both of these big names?
Well, the Mag 7 begin their earnings spree with Meta and Microsoft reporting after the bell this evening. When it comes to Meta, Jumana, it's all about how they justify, how Mark Zuckerberg justifies this big strategic push into AI. Remember, he did that large acquisition, large investment in Scale AI that was worth $14 billion. He's also launched this AI task force recruiting these AI geniuses from around the world. That has been something that is going to weigh on expenses in the second quarter. Does the revenue from their digital advertising business, basically pair with these expenses? Is it something that investors think is justified? That is going to be the key for the Meta earnings. When it comes to Microsoft, it's all going to be about the growth in their cloud business that's driven a lot of their sales growth in the last few quarters, last few years, actually. And keep an eye on the sales boost from AI tools. It's all about the commercialization of AI tools. Remember, Microsoft does have that big partnership with OpenAI's ChatGPT. GPT. Are they able to capitalize on that? And those sales related to those AI tools could pose a big upside in these earnings tonight. But with both Meta and Microsoft, a lot of attention also on CapEx guidance, whether they raise their guidance like Alphabet did last week. There's also one more to mention tonight, which is Qualcomm. Jumana, they're a main chip supplier to Apple, so it could foreshadow what we could hear from Apple when they report on Thursday. We also get another one of those Mag 7s reporting on Thursday after the bell with Amazon. Jumana.
So many earnings this week. Luckily, we have you to break it down for us. Valerie Teitel, thank you. Now to some of the other stories making news today. Apple has lost its fourth AI researcher to Meta in a month, with key engineer Boeing Zhang joining Mark Zuckerberg's superintelligence team. The departures have thrown Apple's foundation models group into turmoil, with more staff interviewing elsewhere. And Bloomberg has learned that Anthropic is nearing a deal to raise as much as $5 billion in a new round of funding that would value it at $170 billion. A source tells us the financing is being led by Iconic Capital, which may invest about $1 billion. Sales at the AI startup have surged, with recurring revenue forecast to hit $9 billion by the end of this year. And Microsoft is in advanced talks to land a new deal that could give it ongoing access to critical technology from OpenAI. The agreement would let Microsoft use OpenAI's latest models, even if the startup reaches its goal of building a more powerful form of AI known as artificial general intelligence. Under the current contract, Microsoft would lose some rights to OpenAI's technology if the company develops AGI. And Hawaii and some parts of California's coast are bracing for tsunamis to hit within hours after a powerful earthquake in Russia's Far East triggered alerts across the Pacific. The magnitude 8.8 quake struck at a depth of 21 kilometers off Russia's Kamchatka Peninsula on Wednesday morning, local time, triggering tsunami alerts from Japan and China to as far away as Indonesia and New Zealand. And plenty more coming up on the show. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
It is definitely a stagnant market.
Everybody's looking for a slowdown in job creation.
You're seeing a tightening in parts of the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Jobless claims have just hung in there.
This is a hot report. It's definitely going to be taken with notice and optimism from this administration.
The July Jobs Report, Friday on Bloomberg.
That depreciation of the U.S. dollar is helping amplify, in effect, the tariff shock, because it's making foreign goods more expensive, both because in their own currency they are now becoming more expensive when you convert that into dollars, and also because they're facing the tariff. So it's amplifying the tariff shock, and it's making U.S. goods more competitive. So that is also helping a little bit.
Well, that was the IMF's chief economist speaking to Bloomberg. Well, as we round up the show, we do have several bits of data to watch out for today, including U.S. GDP, the second quarter reading. Take a look at what's been happening to U.S. consumer confidence. You'll see that blue line indicates that there was quite a dip earlier this year around Tariff Liberation Day, but steadily since then, consumer confidence has started to inch its way back up again. So you can see these surveys moving in the right direction, could potentially have a bearing on that second quarter GDP print that's coming out later today. And then, of course, the big one, let's flip over, is that Fed meeting. No one is expecting the Fed to cut interest rates today, but they could lay the foundation for a cut in September. There's about 17 basis points priced in at this point in time. As for what the market is pricing in from now until the end of the year, almost 2 cuts out of the Fed by the end of this year. So we'll see if the language, if anything they have to say about the state of the labor market or inflation is going to move the needle on these rate cut expectations, because they've been quite stable over the last couple of months. The market more or less sitting around 2 rate cuts, which is also what the dots are implying as well. And then switching over to this one is interesting as we head into a big couple of days. Val was just talking us through some of the big mega cap tech earnings that are going to be coming through. And here it just gives you a signal of the profit margins for some of these companies still extremely high. The 4 or 12-month estimates remain very elevated. And perhaps is one of the reasons why there has been so much leadership in U.S. markets led by a handful of stocks. The profit margins is still there. Earnings growth is still there. And so as we head into this week, perhaps the bar is a lot higher than other sectors within the U.S. economy in terms of how much they can beat and how the stocks will react given these valuation levels. But profit margins are still very, very high and healthy for the tech sector. And Bloomberg Terminal users can access all of these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. And plenty of earnings interviews coming out throughout the day here on Bloomberg, including with the UBS CEO Sergio Ermotti at 7 a.m. London time. Then there's also the CFO of Santander that will be on opening trade as well at around 7:30. And there's your full lineup coming up in about the next hour as we head into deep earnings season. More of the earnings coming through this week and in the next 24 hours. And that was it for Daybreak Europe. The opening trade is coming up next. This is Bloomberg.